What's up, team? This is Sean from Invest to Live. We're not going to waste any time. We're going to jump right on in today. We are talking about the basic understanding of what is Forex. What does Forex mean? What do you do with the Forex markets, and what even are they? So we want to take this really as a journey on a Forex 101. It's going to be a quick video. And if this is interesting or you derive some value from it, please let me know in the comments, and I would love to make more extended videos that go deeper into the details. So again, my goal here is to be pretty quick in what we're presenting. And my mission here is to try to make it as simple as possible. That's really the goal. So in a nutshell, it's an introduction to Forex markets, simplified. So let's pop on in here, right? Forex 101, what are we talking about? Well, it's the basics. So Forex, what is it? What gets traded in the Forex market? What is a pair? Is the FX market big? Well, how big? How to participate in the marketplace? And then what's next on the agenda here? So what exactly is Forex anyways? If you're a newbie to it, you've never heard of it, you've heard of it but don't really understand. Well, the Forex market, which also goes by names such as the FX market or the foreign exchange market, is a global financial market for the trading of currencies for different currencies, right? It's an exchange market. It's both global and decentralized. So unlike stock markets, we're used to central exchanges, the Forex market does not work this way, and you have to leverage brokers to get access to these marketplaces to make yourself part of that process. So the big question is, who uses the Forex markets? Well, it's pretty simple, really. When I think about the Forex markets, I want you to think big. In fact, think really big. We're talking about global central banks. We're talking about global enormous corporations. But sometimes we're also talking about individual speculators and retail traders and investors. We could also be talking about people who are just trying to hedge their positions in different ways. But the real grasp I want you to walk away with is we're thinking about country level operations, central banks, countries, and major corporations. Okay, it's really important to get that scale because the scale is going to matter. So the first thing we have to understand is, well, it's a foreign exchange market. So what exactly are we exchanging? Well, the exchange rate is what we're looking at. And the exchange rate is how one currency from one country compares relative to a currency in another country from a price perspective or a price for volume perspective. So I wrote it down here to be pretty straightforward, but I want to talk about it just quickly. The exchange rate is the relative price of two currencies from two different countries. Okay. Rates constantly are moving and profits can be found here because I think many people who are watching this are most likely on the retail side of the house, not institutional level investors and traders. So our challenge as retail investors is how do we look for markets where there can be opportunities for speculation and therefore profit as well. So I want you to think about this in the easiest possible terms. If I have a US dollar, how many yen can I get for that dollar at this exact point in time, right? This spot in time. Maybe that $1 buys me 10 yen or 10.1 or 10.2. That's the exchange rate. 1 for 10.2. And then in reverse, I might want to know at the time of exchange, well, how much can I get in US dollars for my 10.2 yen, right? And that is the exchange rate back. So it's important to understand that we're always talking about the exchange rate between different currencies of different, countries, geographies, et cetera, whatever the case might be. So really basic idea, but sometimes the confusion can be in the basics. So what exactly are we exchanging these markets? It's easy to say, well, currency, but really the truth is it is that simple. It's the moolah, the cheddar, the bucks, it's the cash. We're talking about currencies of different countries. And that can be confusing depending on where you are and understanding what that means, because sometimes we're talking about the US and the dollar, but maybe we're talking about the Eurozone and the euro. So it's good to call this out and understand where the biggest pieces of volume are in the market and the most commonly traded pairs are as well. And I want to call this out one more time, right? That idea of a pair is two disparate or different currencies and how they relate to each other from a price perspective. So I listed out the 8 most common currencies, or what we call the majors or the major currencies here. It's the US dollar, the Canadian dollar, the Great Britain pound, the European euro, the Swiss franc, the Japanese yen, the Australian dollar, and the New Zealand dollar. These are the most popular or highest volume that we typically will see out in the markets, okay? It's important to know this as well because that means that there's massive volume and it helps to not have wildly unpredictable swings on the underlying currency. Not that there can't be, because there always can be. So I just want to call this out one more time because I think it's very important to understand. You are never talking about a currency in relative nature to itself, right? We are talking about a pair. A pair is basically the grouping of two currencies at their relative price, as we've discussed. And I just think about this in its most basic term of what can I get for one of these if it's in compared to this or this or this. And the way those things will change throughout the day or over a period of time is where there can be speculation or room to take profit. Okay, that's the approach from a retail perspective. So I want to really double down on this point because I think it's super important to call it out. We're used to talking about big markets like the stock market, right? The New York Stock Exchange, NASDAQ, big international markets that exist on the global scale. When we're talking about Forex, we're talking about a whole different level of big. Big isn't even a good word. Huge, massive, enormous are probably better words. The question is, well, why is it so big and how can it be so big? Well, first, let's define what does huge and big even mean? Well, the FX market trades $6.6 trillion a day in total volume. That's trillion with a T, okay? 6.6 trillion a day in volume. So you might be saying to yourself, well, geez, that's huge. Why is it so big? Why is it so much? And as we talked about a little bit earlier, the idea here is that major global central banks, institutional players are in this market, as well as government entities and institutional firms who need to constantly be moving money from one currency to the next, cross-border exchanges, cross-border transactions, bringing money back to the home country in their home currency. So there's always this ebb and flow at all times to be exchanging and differentiating on the money that's on the books, where it's coming from, back to your home currency and back again. So there's a lot of good reasons for why it's both big, massive, and has such volume, because we're talking about humongous things here, not some stock that is going up a few dollars a day and there's a few 100,000 trades made. We're talking trillions because we're talking about the pure underlying currency, the money, the moolah. So it raises the question, in such a big market, what place does retail investors or traders have here? Well, if you look at it across the aggregate, and this number does shift a little bit depending on market fluctuations, what's going on in the overall markets, retail traders and investors make up somewhere in the neighborhood of about 3 to 5% of the total volume in the market, which, by the way, is still a huge amount. And although retail traders do exist, they're not really the standard player in this space. So just calling that out too, that even the big retail players don't put a dent in the numbers here. Now, the next obvious question I thought that I wanted to share here was, well, okay, how do we participate in the market? What does that even look like? And what are the options for doing that? First things first, I want to call it out that Forex is open 24 hours a day, 5 days a week. So depending on where you are located, it's going to fluctuate on that start time. But typically speaking, from Eastern time in the US, we open the market at 5 p.m. on Sunday, and they close at 5 p.m. on Friday. So that's the typical range of what we see for the open markets within FX. Now, within that, there's 3 different ways to potentially trade this. We have what we call spot trading. This is making real-time bets on OTC exchanges, because remember, this is a decentralized platform, on what you think might happen. So on a spot trade, maybe I buy dollar euro, and I think it's going to go up, so I buy long. Maybe I think it's going to go down, so I buy short. The idea here, though, is you have to leverage a specialized broker who has access to these markets and can get you into them to be able to put your order in and actually get what you want back out. So you're typically using, standardized brokers or apps to do this work. It's not always going to be your standard, regular broker for stock trading or currency trading, or for cryptocurrency trading, et cetera, as well. Okay, so spot trading can be different for some folks who are used to very standardized, closed marketplaces with defined, users and defined pieces inside of it. This is very much decentralized in an open marketplace. Now, the other way to trade this, which I think is really more relevant for most people who are going to watch this, is to leverage things like currency ETFs. So this is no different than any other ETF in the stock market, and it's very useful for diversification and hedging. So if you don't want to get into understanding all the different pieces of spot trading and how to look at the differentiated value and understanding the pairs and the relationship amongst them, that's okay. You can treat currency very much as just any other ETF that you might have in your portfolio that you hope goes up over time. Sometimes the value of currency ETFs, though, is they can provide a hedge against the rest of your portfolio, because we might see that an economy is going down. So rather than look at all of our positions going down, we might be able to play a strong currency behind it and get some protection as our positions go down otherwise. So this is still kind of advanced stuff, but I just want to share that there are different ways to think about this and how we would use it as well. And certainly, of course, any ETF can be speculated on like any other stock for that matter. And then the third and probably most relevant way that I often think about it as well is really in and around options and futures. So, yep, we're going to call it again. Just like stocks and commodities, these are contracts to buy and sell at a future date and a future price. So you have the optionality here of thinking where the euro might end up against the dollar in 6 months, or the yen, or anyone else for that matter. And of course, for options, these are rights but not obligations. Futures are, in theory, obligations. So the call out here is traditionally would be for real delivery, but of course, in the retail markets, it's just for speculation. So I want to call this out as well, that Forex does not have to be done on a Forex exchange. It can be done as a currency. It can be done as a derivative. There's lots of different ways to think about it and how it'll fit your profile and your portfolio. I want to take a full pause to call it out. Forex offers unique and exponential risk because oftentimes margin is included with spot trading. So please make sure you fully understand the massive risk, the risk of losing everything you have, and why you definitely should not do this unless you know exactly what you're doing. So I'm just calling that out really to be clear here that there's massive risk, okay? So that's it. Those are really the basics I wanted to cover. I'm deciding on what direction to take this next, and I was hoping for some feedback from anyone who've used this. If you watch this, you think it's valuable, you want me to go deeper on particular strategies, on ways to play this, I'm happy to do so. Let me know in the comments down below. And then additionally, if you have any questions about the things we covered, thoughts, reasons to stay away, have you tried it and it worked or didn't work and why, share it all down below. We'd love to hear it and love to hear your story. So with that, team, I'm going to basically leave it at that. This was a short one. I appreciate your time. If you're interested in learning more, let me know. I've been in this market for a very, very long time. I've actually been in Forex longer than equities or options or anything else for that matter. So great talking to you. I hope you got a lot of value from it. And otherwise, have a great day. Thanks for watching.